Welcome to the Specialist Trading Weekly Stock Review for the week ending April 29th, 2011. Now in this week's review, I want to bring over a topic which I continually stress upon my students, especially my new students, and that is to listen to the market and not fundamental news. I'm going to show you how learning how to listen to the market will actually help you in the long run, as opposed to listening and, most importantly, waiting for fundamental news to come out before you can make a decision in your trading. But before we get into that, as always, I want you to please take a moment to view our disclaimer. I'm going to show you the performance results from our strategies signals this week. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock review. Okay, as I stated, I want to stress how fundamental news really plays no part with the philosophy of specialist trading. I believe that fundamental news, listening to fundamental news and earnings reports and things of that nature do come into play when you are investing, when you are looking at the long term, 3, 5, 10 years down the road. But when you are looking to make a decision that will probably come to play within the next 3 to 5 days, we're really not concerned with any type of news. I believe that fundamental news will only get in your way. I know a lot of my students will, used to swear by they would not make a trading decision to enter or exit the market until the news came out. And so I'm going to show you how that can really work against you. Because this week, I'm reading here from the Wall Street Journal blog's Market Beat, and Wednesday of this week, it was commenting on something that had happened to BRCM, Broadcom. On April 27th at 10:30 a.m. Eastern, it came out with this blog, Broadcom outlook slams the stock and bullish analysts and squirm. So Broadcom reported an inline quarter late yesterday, but its forward guidance disappointed investors. Several analysts slashed price targets, and Broadcom is getting slammed in the market today, down about 12% at 35.38. So Broadcom was getting killed. The market was falling out of bed, or stocks were going down because of this one stock. And so, a lot of people, especially new to trading, would say, well, okay, well, I'll look to be negative, and or else I'll pull out the plug. I won't trade anything until I see how the market settles after this. Well, let's go a little further back in the past. 2 days earlier, on the 25th, this is Broadcom, BRCM. As you see here, where the green line is, we had a signal issued that night, the night of the 25th, which we issued to all of our members. So they knew prior to any of this news coming out, on the 25th, 2 days in advance, that we were telling our students and our members to go short Broadcom. We had no news or no information about anything that was going to be happening within the company, the earnings or the estimates. All we know is that we listened to the market, and the market was telling us that we should be looking to go short, especially if we traded where that green horizontal line was, which was right there. So we entered the short trade on the 26th, and we got short, and as you can see, well, the rest is history. Now, it wasn't as if Broadcom called us up on the 25th and said, Steve, we like your program at Specialist Trading. We want you to warn all of your members to get short because some news is going to come out, and it's going to be very negative for our company, so we think you should know this. No one told us any information. I'm just being a little sarcastic here, but this is what I mean. When you learn to listen to the market, you really don't have any concern for fundamental news. You don't have to, really waste your time with that. I know of a lot of traders who make great money, trading solely off the news. The only trouble is they have this kind of innate sensibility. They have this innate chart where they can really discern what the news is, and it's very subjective. It's something they can't teach, but it's something that they have inside them. So it's very difficult to teach that to anyone and to try and persuade anyone to believe you, because there's nothing really you can base it off of other than that you have this kind of innate feeling of which way you think the stock is going to move off of the news. So it's difficult to trade that way. There are a select few that are able to do it. Much easier to just listen to the market and do what the market is telling you. So once again, we knew 2 days in advance that Broadcom was giving us a sell signal. So hopefully some of you members out there were able to take advantage of it. All right, so let's look at the stock positions that were initiated this week. We had a really nice week this week. Out of the 5 trades that we got into, all were winners. And the beauty about this was that we had both long and short trades, and they both worked out. And we'll show you exactly how we fared this week in all our signals. Our first one was an ACE. This was our most common strategy, strategy number 4. Gave a buy signal on the 25th, on Monday, to go long. We went long at 65.55. We exited on the 28th, Thursday, at 66.54. So we made nearly a point on the trade. First rule is, where is price in relation to the buy-sell line? The 50-period simple moving average. Price is above. So this means we can only look for buy setups, regardless of what strategy we're looking at. Strategy number 4 gives the most signals. So under that guideline there, we see that we have a perfect setup bar using strategy number 4 signals, meaning that we can enter into this trade if we trade one tick above the next day. Well, the very next day we just barely traded above, so we entered long at 65.55. Here are your two options for stop placement. Remember, once again, these are proprietary calculations of how to come up with a stop placement. One is for more conservative trading. The other one is for more aggressive. It's up to you to decide which style you want to trade. And then, listen once again to the market and listen to inside whether you're a more conservative trader or a more aggressive trader. And then study the signals and the rules, and you can come up with and decide which stop placement you want to employ. Okay. Once you've done that and come up with the calculations, then you have to come up with the calculations for exit. That, once again, is a proprietary calculation that you have to study and learn. And very simple after you've done it for a while, but in the beginning, a lot of our students have trouble with it. So we always suggest going to the video learning section and learn how to exit, what the exit levels are for strategy number 4. And this level came out to 66.54. Okay, so you simply would place an open order to exit all of your position. And as you can see, we entered right here, and roughly 2 or 3 days later, we exited with a nice 99-cent gain. Our next trade was in the letter X. Now, the very same day we went long ACE, we had a short signal in letter X with the same strategy. So this is why we tell our students, just look at the signal and the stock in which it's applied. Don't clutter your trading with other things, meaning trying to add a lot of filters and a lot of ways to help you make your decision. If there's a buy signal in a certain stock and you like it, take it. If there's a sell signal in another stock the exact same day, then take it. There's no correlation. The market is different in each one of these stocks, okay? So on the 25th, we went short letter X at 51.64, and we covered 2 days later at 50.06. So we made nearly, we made over a point and a half, I should say, a point and 58 cents. Okay, now we ask ourselves, where is price in relation to the buy-sell line? In this case, price is below. So this is telling us we're only looking for selling opportunities. If we're trading strategy number 4, here is our perfect setup to go short. Okay, but we can only go short if we trade one tick below this setup bar, and it has to be on the very next day. We opened a little bit higher, kind of fumbled around here for a bit, and then went lower on the day until we went short at 51.64. Here are two options for stop placement. And then we came up with our calculation to exit, and we entered an open order once we came up with a calculation at 50.06. And then that's it. You just simply wait. There's not a lot of analysis further on your part. You just wait. You've gone through all the rules. You know exactly how the strategy is. You're either going to get stopped out or you're going to exit with a gain. That's the way you should keep your trading. You shouldn't be coming in with all these different variables and changes in plan and optimizing and stuff. There should be maybe 2 or 3 decisions, and that's it. And we were out the very next day at 50.06 with a 1 point and 58 cent gain. Our next trade was in BRCM. As you see, we had, on this particular strategy, we had 3 different strategies telling us that we were looking to go short. Strategies number 1, 3, and 4. Now, each strategy has a different persona. Strategy number 1 is for the long term, telling us to go short, and that we can be in the trade possibly 2 weeks. Strategy number 3 is kind of, maybe anywhere from 3 days to a week. And strategy number 4 is anywhere from 1 to 3 days. So you have longer term, intermediate, and shorter term type trades, day trades, I should say. But they were all telling us to go short Broadcom on the same day. So it really didn't matter which strategy we picked because we all entered at the same price, which was $39.98, and we all exited at the same price, which was nearly 3.5 points lower because of the nice gap opening to the downside. You would have exited all 3 of those trades. So here's the chart again in Broadcom. Once again, we are for all intents and purposes, below the buy-sell line. Now we closed above, and here we straddled it. But remember, the rule really states that if you get a signal to go short, such as we did here in all three of those strategies, your entry must be below the buy-sell line. It's okay if the bars before are so closed above, but as long as your entry is below, it's a valid signal. So our entry was obviously below because we closed below the buy-sell line. So we entered at 39.98. Our stop is right here, just above. And if we were trading strategy number 4, which is our shortest term strategy, we would have exited right here. As you can see, roughly around the 39 level, we would have made a nice point. But because of the gap opening down at 36.63, we gained over 3 points. And the beauty of this is, regardless of how many points you made, or if you made 10 points or you made 50 cents, it really doesn't matter. The beauty is that the philosophy of specialist trading is that the market is telling you everything you need to know. The only thing it asks is that we listen. And most of us don't. We really clutter our trading with listening to the wrong things, which really is noise, which is fundamental news. We watch the television commentators and think that they know more than we do. We subscribe to newsletters. We do the worst thing, which is my opinion, is to be in a chat room or a trading room, because you're basically listening to people that know more than anyone else, and they're giving their suggestions. The best thing is just, and the cheapest thing is to learn how to listen to the market, and you don't have to waste your time and especially hard-earned money on all of those outside external things. All you had to do was learn the simple strategy, and you had a nice gain here. And once again, regardless if it's a 10-point gain or a 50-cent gain, the main thing is to listen to the market. Our next trade was in CEG, strategy number 4, to go long on Wednesday the 27th at 32.98. We exited the same day at 33.42. We made nearly 50 cents on this real quick trade. Now, here's something that happens from time to time, but let's go over the logistics of this trade first. We're above the buy-sell line, so we're only looking to go long in this case. We're trading strategy number 4, so here's our setup bar. All right, we went long once we traded above. We came up with a proprietary calculation to exit. Now, from time to time, you will see this happen. This is just something that, is an aberration. There are many ways to stay in the trade longer, but that's up to you. But as you can see here, that we left a lot of profit on the table because we exited really quickly with a quick 44-cent gain. And as you can see, the trade continued to go up even higher on the day, and you would have made probably an extra half point, maybe even 3/4 of a point more had we stayed in for this particular day. And then following the trade even longer than that, you can see that you would have gained even more had you held on. This is another example of just the market was telling us that it wanted to go higher. Because prior to all these large gains here, we still had a very flat market. The stock was just kind of going sideways. But it was because we had a signal bar. It was telling us to go long. So we always tell you different ways in which to stay in the market longer if you want to hold on and stay. There's nothing wrong with doing that. A number of my students will always say, Steve, I love the consistency here, but I'm just racking up these small little gains. If you would like to stay in the trade longer, there's nothing wrong. You're not going against the entire philosophy of specialist trading. But the simplest way to do that is, though, you must trade more shares than you usually do, multiple shares. 2 to 1 is the best ratio. So in other words, if you're used to trading 100 shares, you should be trading now 200 shares. And what this means is then, rather than exit the entire 100 shares at 33.42 the way you would, you're now going to have 200 shares that you entered long. You will sell half of your position at 33.42. And then once you do that, you will now move your stop to unchanged. So if the stock following your initial exit turns around, well, at least you break even on the second portion of your position. But if the stock continues to go up, such as it did in this example, well, you at least have half more of your position free to extend your gains. So that's the simplest way to do it, and it's pretty much a discretion play as to how long you want to hold this. Okay, but this is one instance in which you could have done that. So a number of students, always ask me, am I going against the rules by trying to stay in a little longer? No, not at all. We really want to teach you basically, entry techniques, stop placement, and exit techniques. But if you want to, kind of, add a little discretion in there, you're not going against the strategy at all. Now our next trade was in FLR. Now this was strategy number 4, once again, where we just went long the other trade. Now we're looking to go short in FLR. So this is once again a perfect example of how these strategies work regardless of what direction, regardless of the trend of the market. The market had a really nice rally this week, but you see we had some really nice trades to the downside. Now we went short FLR on the 27th at 68.54. Guess what? The same day we covered at 66.83, made a point and 71 cents. As you can see, we're below the buy-sell line, so the market is right away telling us we should only be looking to go short. So we're listening to the market. Secondly, because of this bar, the bar is telling us that this is a perfect setup to go short, but only if we trade below the low of the setup bar, which it did the next day. So we entered short at 68.54. Guess what? Came right down to our proprietary calculation at 66.83. We covered and made nearly a point and 3/4 in that same day. This is why day traders and short-term traders love strategy number 4, because many times you're in and out of the trade on the very same day. All right, now we still have about 3 trades that are in play. In other words, we got into these stocks, but we haven't fully executed them yet. So we're still into them, and let's show you what these are, and you can follow along with them next week. Our first one is an MAR. This was a double strategy, meaning that we got signals in 2 strategies. Strategy number 3, the intermediate term strategy, and strategy number 4. All right, we went short on the 26th, Tuesday, at 35.32. So let's look at this through the eyes of strategy number 4. As you can see, nothing much has happened. We had the initial setup bar. We went short the very next day, and since then, absolutely nothing has happened. So we've placed our stop at stop placement number 1. We've placed our other exit order to cover everything at 34.26, and now we're just kind of waiting. Either we're going to get stopped out, or the trade is kind of making a ledge here and we're going to fall out of bed. This remains to be seen though, so we invite you to follow along with us next week to see how this trade unfolds in MAR. Our next trade is doing a little bit better. This is SJM, strategy number 4 once again. This trade we went long. Once again, we're doing opposites here. We went long on the 27th at 74.49. Now we're employing our conservative method here because we entered the trade off of this real nice buy setup at 74.49, and this is one of the suggestions that we always give our students, especially the new ones when you're beginning. Once you come up with a calculation for exit, which happens to be at 75.84, we always suggest that if you reach 70% of that distance to the exit point, which happens to be right here, we always suggest, especially beginners, to move your stop to unchanged, because since you're trying to learn these strategies and you want to conserve all your profits or at least your capital as much as you can, you would hate to see a trade come up very close to exiting with a gain but then roll over and then turn into a loss. So that we always feel that it's best to at least kind of maintain your capital. So if we get 70% of that distance to exit, we move our stop to unchanged, and that's where we are right now. So this trade may proceed to go higher next week, and then we'll exit with a nice gain of about 1.5 points roughly, or we may turn around, and if it does, we'll just break even on the trade. And that's the same scenario with our last trade. Unfortunately, we thought we were going to exit this today. We missed it by 3 ticks. This was in JNPR, another short trade to go short JNPR on the 27th at 39.02. We're well below the buy-sell line. We have a perfect setup bar here to go short, so we entered short the next day at 39.02. We came up with our proprietary calculation to cover the entire trade at 38.11, so we have a resting open order in there, and as you can see, we've come down to the 70% level, so our stop has been moved to unchanged. Now today, we came within 3 ticks of covering everything, but we just couldn't do it. So once again, we're either going to go lower here next week and we'll cover the position with a nice gain, a nice quick gain, or we will turn around and we'll at least break even on the trade. So this is proper money management, whereas we're not trying to, go for the gold. If we want to be more aggressive and go for that gold, then we're more than, able to just keep our stops in the same place and just wait to see. But it's entirely up to you. That's why we say this is a rule, but a rule that must be followed properly if you decide to trade conservatively. If you don't want to trade conservatively, then you don't have to even use this. There's no point even using this rule. It's more of a suggestion. So These are, once again, options that we give you so that you can design the own process that fits your trading style the best. All right, so let's recap this week's stock trades and signals that we generate for you on a nightly basis. We had 5 trades that we took. Out of those trades, 2 were longs and 3 were shorts. Now that's interesting because the market had a nice rally this week, and the majority of our trades that we're in were short trades. Now, out of those trades, they were all winners. So this is, once again, the point we're trying to make. Don't get too caught up in trying to overanalyze things and saying, well, the market continues to go higher. I'm only going to take certain signals and certain stocks. Just take each individual signal for what it is, okay? And especially when you're learning, just paper trade and see how these unfold. Now, they were all winners, and the points made this week were a little over 8 points and 7 cents. Now, if you recall, last week we made 6 points. So things are starting to get much better here because we have a nice trend in place where the market is following its own individual trends. Now, once we see the market start to stall or decide whether it wants to move any more higher or not, you'll start to see this reflected in our P&L. You'll start to see, well, maybe we only made 1 point or we lost a few points. It's because we're following the market. We're not listening to anything outside of the market. Other than if the market is giving us signals, it means that the market wants to do certain things, and we're just jumping on board. We're not fighting it. We're not second guessing it. We're just learning how to listen to it. Okay? This is why we want you to learn these strategies like the back of your hand. Okay? We want you to really fully understand them, and the only way to do that is to watch the videos and then paper trade. If you get a question while paper trading, as many of our students do, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you the performance results from this past week, but remember, we can in no way guarantee that any of these results will be repeated in the future. Once again, if you get any questions, do not hesitate to email me. If not, have a safe and relaxing weekend, and we'll see you right back here next week. Bye-bye.